Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 220 of the AJ Brown Show. Today is January 23rd, 2026. My name is Cyprian Francis, and with me, as always, a fresh-looking AJ Brown. Good morning, AJ.
Hey, what's up, Sip? Good to hear you.
Great. We were commenting today. Great haircut. Shout out to the barber.
Yeah.
You'll be shooting some content this week, so folks, stay tuned. We got some
Yeah.
cool stuff on the way. Looking at the markets today as we start the day, people are feeling good, but still a little bit of overall uncertainty. Where do you want to begin today's show?
I mean, we could start with just the big, what started the week. So we went into the week with a whole bunch of rhetoric. Well, first of all, we had Monday as a holiday. There was a bunch of rhetoric all over the long weekend about this whole Greenland thing, which a lot of investors would really like to see, the administration and Trump specifically just move off of this topic, right? But a lot of excitement about Greenland. Not so exciting for investors, as you can see. The rhetoric started on Friday when we met last time, and then on Tuesday, the investors were like, "Just give it a break." And sure enough, Trump, taco style, it was like taco version 2, decided to just retrace back on that, especially after he gave his speech at in Switzerland, and all of a sudden we weren't going to get Greenland by hook or by crook, but that there'd be a framework and a deal and an agreement, maybe not to acquire Greenland, but just to, I don't know, because a lot of it was left. I think the quote was, well, you'll have to see, wait and see. But it wasn't as poignant. So investors started to put risk back on, but not up yet to the levels as before because, there was a lot more information given this past week, economic wise. The economic calendar had a couple of data points, although, God, because of that government shutdown, Sip, we're still getting such delayed data. We had that personal income and outlay number released on Thursday, but it was for November. I mean, November is so far in the rearview mirror, still hinting at the fact that inflation is a little bit on the hot side, especially on the prices side. Oh, actually, this is personal income and outlays for October. So far in the background, but on the GDP numbers, again, quarter three final numbers, we're already into quarter one of 2020. So, we're missing a whole quarter here with quarter four advanced, quarter four preliminary, and quarter four final. But man, they're showing great GDP numbers, but also showing pretty heavy PCE numbers for quarter three at 3.5%. So prices are up. I mean, that's all we can tell is that prices. Oh, wait a second. There's two personal income and outlay. There's November's numbers. Yeah. So let's take a look at this really quick because personal income came in below expectation, right? Personal income came in. If you take 0.3 and multiply it by 12 months, it's at like 3.6%. Again, still hotter than the Federal Reserve would like. But then personal consumption expenditures, this is the expenses. Expenses are at 0.5%. That's not good, right? 0.5% times 12 months, that's 6%, right? That's saying that prices are going up 6%. That's inflation out of control. Now, if you factor out some of the more wild things, you're still talking about 2.4%, and looking in the last 12 months, it's 3%. So this is showing that inflation is a little bit hot. Again, we don't know if that's a one-time hit because of tariffs. I think investors sip on the whole discussion of tariffs. They're also getting tired of that discussion. We can talk about that. But yeah, I think investors, I mean, I keep saying it every week, but confusion, uncertainty, what's the real status of inflation? What's the real status of employment? The real status of AI? I mean, we don't know what reports can we trust. I don't know. I don't know if this is where we wanted it or what, but there's a lot of doubt in the system overall. So that's kind of where we're at.
My question to you on that is, in your experience, do you remember a time where the market was driven by so much political and or discussion outside of the mechanics that are really supposed to drive the market?
No. I mean, you could actually reference when Trump was in office the first time from 2017 through 2021. But even that wasn't as dramatic as this. This is intense, Sip.
And so I guess we do have the FOMC coming up, what it looks like
Oh my
January
gosh.
28th. And so are we pricing that in? Is that going to be our kind of next big market shift or driver?
No. The FOMC out. So while Jerome Powell is still the Fed chief, there's no expectation of any more rate cuts. Maybe in June, there might be a rate cut. It's kind of a 50-50 chance that there might be a rate cut in June. But I think so. Let's talk about stuff that's not usually driving the market. Let's talk about the fact that the Supreme Court is hearing arguments about Letitia James being fired by Donald Trump, which, by the way, first time in the 125-year history of the Fed that a president has ever tried to fire a Fed person. And the Supreme Court, with their questioning back to the Trump attorneys, they're not having it. It doesn't even seem like the most conservative of the Supreme Court justices are even interested in talking about messing with the Fed independence. But also, there was something amazingly unprecedented as well, and that was Jerome Powell was sitting in the Supreme Court building listening to this testimony. Now, the last time a Fed chief even showed their face besides at the press conference, this is the Fed is supposed to work behind the scenes and completely independent from politics. So the fact that Jerome Powell, and then also it's very rare, but the Fed chief can actually stay on after and be part of the Fed governors after their term is up. That's something, and it was done quite a few decades ago, but it hasn't been done since. But with all of this pressure that Trump has put on Jerome Powell, I think Jerome Powell's also had enough. And, if he stays on past March, even as a voting member of the FOMC, that's still going to outweigh a lot of the a lot of whoever Trump installs. That's going to create a balance shift, so that maybe there's not going to be an extreme takeover by the Federal Reserve like Trump would have it. So, that is also unprecedented, never seen it before, at least in my lifetime, but these things are happening.
And so I guess with the no expectation of rate cuts, does that mean that we look to something else? Obviously, can he say something in his speech that can move the market one way or another?
Yeah, I think more importantly, so another thing that let's get this straight. Rate cuts is the overnight lending rate that the Federal Reserve loans money to banks, right? It indirectly affects the 10-year rate. But as we've seen in the past, like the past couple of rate drops by the Federal Reserve, the Federal Reserve drops rates and the 10-year goes up, right? Because the 10-year is actually traded and the rate is determined by the appetite of investors for US debt, right? When there's no appetite, when people are not interested in funding US debt, the 10-year treasury yield goes up, right? Because basically the government has to say, well, if you don't want to buy our debt at this return, will you buy it at a higher return, right? And so the 10-year rate is what auto loans and mortgages are predicated on. So even though this interest rate is really interesting, it's actually just kind of indirectly, it doesn't directly affect our mortgages and our interest rates. It's kind of this is what the Fed is thinking, and maybe the market will come around. If the Fed is thinking of lowering the overnight rate, maybe more people will be, the more people that are interested in buying the debt, the less yield it comes down, then our mortgage rates come down. Okay, so we've talked about it on this show. The Fed has three mechanisms. Number one is that overnight interest rate, which we know is not directly. Number two, that press conference. You're right. Any words that they say, and they usually keep their words. And there's like funny memes of Jerome Powell, and they're like, ask him the long-winded question, and he's just like, no. Very, very short words, but people read a lot into it. So that's number two. Just what they say can move the markets. But number three is this thing that you and I take a look at that most people forget about, which is the Federal Reserve buying treasuries. Now that can directly affect long-term treasuries, right? If the Fed is a market mover, the Fed is a whale, right? When the Fed goes in and buys 10-year treasury bonds, that they create an artificial demand and they can lower rates that way. And so Donald Trump has been asking the Fed to, go in there and, 200 billion of treasury bonds, right? And they haven't done that, but you can see they have increased their purchase, right? We've been watching them decrease their holding of treasury bonds and even mortgage-backed securities over the last 4 years, right? But just recently, they spiked up, they pulled back, but they're slowly increasing. So they are increasing their holding. They spiked from a low of 6.53 trillion. Donald Trump wants to see it up at 6.73 trillion. They spiked it up to they basically spiked it up $100 billion, about half of what Trump said, but then they pulled it back, right? But that could directly affect those mortgage rates. The more that the Fed buys, they create that artificial demand. It lowers interest rates. That could affect the 10-year. But remember, the Fed buys these mortgage-backed securities and these treasury bonds. They buy them with funny money. They don't buy them with real hard-earned money, like, for instance, when individuals buy treasury bonds, or when other countries or investors in other countries or corporations buy treasury bonds. They're actually buying treasury bonds with just made up money and holding it like credit card debt. So it's a temporary fix to lower interest rates, but that's what Donald Trump wants to do.
So next Wednesday is going to be an important event. Maybe I guess we're in a holding pattern for now, and we need more data. So I guess the next CPI or the next inflation or employment report, if it's up to date, I mean, it's starting to not matter, it seems like.
I almost wonder, and this is AJ Brown, the conspiracy theorist, I almost wonder if throwing a wrench into all these different works is a way to make confidence in everything so low that you can actually then justify trashing it all and almost saying, hey, rely on this new system that I've put in place, right? So, you almost wonder if creating all this doubt in investors, creating all this doubt in the regular people isn't a strategy, because then you can actually position yourself and say, "Yeah, there's so much doubt out here. You should just believe in me."
Yeah, and we'll cover some of the things that happened this week, but I do want to run through some of our major, right. So markets are pretty much where they were last week, still kind of hovering at these highs. We've got oil
Off
at
the off
61.
the highs.
Yeah, look, yeah, still, but and that pullback, like if I think the intraday when Trump was speaking with the Greenland was like really huge swings where we were kind of the bullies for the beginning of the day, and then it sounds like they struck a deal later in the day. Gold, metals are still up. Oil is kind of pretty steady. Bitcoin is pretty steady. So not much change from our discussion last week, where
I mean,
it
gold
unless
and
gold is
silver
about
sip.
to hit
Yeah,
5,000, it looks like.
gold is going to hit 5,000. So there is so much doubt in what the US is doing right now. There's so much money going into both precious metals. And I never in my life, because I'm so used to silver. I remember when silver was $12. And then for like a decade and a half, it was around 25 to $30. Never in my life did I ever think silver would go for $100 an ounce. But so many people who can't afford gold are putting their money into silver. There's so much money being taken out of rotation and putting it's basically like burying it in your backyard. You almost feel like putting it in your backyard in a jar, or buying these bars of precious metal is more valuable than investing in economies. So it's so telltaling, and even for a moment there, Bitcoin went up, but it's back down. People are taking money out of crypto. They're taking money out of equities. They're taking all that excess money that could be used to moving things forward. They're putting it in their backyard, right? They're burying it in their backyard. They're installing a zipper on their mattress. They're putting it into their mattress. It's interesting to watch what's behind the scenes.
And then finally, one of our favorite tools, the VIX. And so, the past couple of episodes, we've discussed some nice positions and opportunities. Where are we at with that? Anytime I see it near 15, 16, I start to think, is this a good time to put that VIX trade on? What are you seeing from the VIX? And is it, something that you're going to be setting up here soon?
So my favorite timing signal for the VIX is what we call the fast MACD, setting the MACD at 6, 19, and 3, and calculating that on the close price. Sometimes you'll see me calculate the fast MACD on VWAP, but in the case of the VIX trade, we like the close price. So let's just retrace what happened. So first of all, I personally jumped in on the VIX trade on this signal back here in the middle of December, and I got my follow through a few days later. A lot of people jumped in on December 15th. I got in more like December 17th, but we all established our VIX trade. A lot of us, I know me personally, I had a 1450, 1550 debit spread down here, and then a 2021 up here, which was my credit spread to offset my debit spread. So all well and good. Then you know that during the holiday season we dipped down low, and I played it off. I basically was saying, "Hey, it's low, but it's the holiday season, and my position doesn't expire until the 21st, and I know something's going to happen." But whenever you go below your vertical spread there, your debit spread, which means the VIX trade could actually once in a lifetime turn against you, you kind of, are on edge. But sure enough, just like I said, and we knew something was boiling. The pressure came off. Actually, down at that low again. We got another signal, and there were a bunch of us who didn't get in at the higher price. They were able to get, some of them even got 13 and a half, 14 and a half. Some of them got 14, 15 spreads, which made it easier to profit on them. And they actually got lower credit spreads, which means they actually were in a better position. So those folks who didn't jump in like I did at the first bottom, but got in at this lower bottom, were actually in a better place because, like we said, sure enough, there was some rumors rumbling. And then, of course, in the beginning of this week, it shot up. I wasn't able to close my position. A lot was happening fast. I wasn't able to close my position at any profit. And by the time Wednesday rolled around, we were back down, and my position expired at that break even where I made a couple of pennies to pay for commissions and take my wife out to dinner, but I didn't make the big win. But I did hear that a few folks who had gotten in at this lower price and established a lower credit spread on Tuesday were able to close out their positions at that max profit. So I celebrate those in that VIX trade. Yeah, you can see that the VIX is coming back down. So we're in a holding pattern, Sip. We're in a holding pattern waiting for our next bottom. And I think, I've been talking to my program participants a lot about validating those end of day signals, basically looking for other things to give you the most confidence around acting on that end of day signal in the subsequent trading days, doing your buying, doing your selling, doing your position adjustment trades. And so I think that all of us on the VIX side, when we get that bottom signal, we're going to make sure we do those validation tests before we pursue those trades on the next day. But as of right now, Sip, we're waiting for that light blue arrow, that fast MACD on close to give us a signal that a bottom has been found. And then we're going to look for other sorts of, details that give us the confidence that that's the good time to enter it. And then look for follow through on the subsequent trading days if we've got a validated entry. And, in our program, that's what we talk about on Thursdays during our workshops. We don't just talk about the trade plans, but we talk about this end of day signals and how we go about doing that validation. But anything that can help build confidence in that signal, that's what we've got to see right now, because that's the only way you can navigate these crazy shocks that we keep getting from external sources to the market.
Yeah, and it being the 23rd of the month, does that factor into kind of when you would look to, I guess first you're waiting for your signal, but then is the timing of where we are in the month kind of impact what you might, the next decision that you might make?
So the VIX has some interesting expiration dates. It's not the third Friday of the month when you're looking at the monthly options like it is for stocks. It's on Wednesdays. But I'd probably, again, depending on when I get my signal, I'd probably be looking at this February 18 expiration. So, it's not rocket science. It's just going out to the next. And you could use weekly options for sure. But I'd probably be looking at this February 18th expiration.
All right, beautiful. The VIX trade, something that we've been talking about this show for quite some time. I think that this is something unique that you offer the community that a lot of educators don't necessarily touch on. And so, if you guys are interested in that, we did put a link to get to learn more about it. But hit that follow button, and you'll hear about AJ's VIX position often. And you got the S&P up, and you're drawing some charts here. We're kind of still consolidating. What's your consensus here?
Well, I've got to point out to people that with the pullback on Tuesday and the low close, I love this retracement analysis. I love the rainbow analysis for understanding what's going on. As soon as we had a lower close than what we had when we started this previous move on December 31st, this made this a trend change move. So in effect, the uptrend that we were in, that we were actually getting mature and it was like becoming more established, it ended. It ended as of January 12th. We had that confirmation on January 20th that January 12th was the end of that little uptrend. And now we've got this new immature trend that's forming. This new immature trend did start on December 31st, and we're seeing it plays out moving forward, whether it's going to be a short one. But what I want to point out is we had big uptrend going until the beginning of October. And since then, in about 3.5 months' time, we've had 1, 2, 3, 4, 5 trend changes. And I looked at our notes for this show, and it seems every week we're identifying a top or a bottom. It keeps flip flopping, meaning not only are our trend changes changing so quickly, but in addition, my God, we're getting move changes. Like we're changing our moves in like every week. When we're in a more calm time where people have certainty about what's going on, we see these moves lasting more like 2 to 3 weeks at a time rather than changing every week. So it's a tumultuous time. Uncertainty, confusion means that people are using options in order to hedge their trades on stocks and ETFs and indexes, which means if they're using those options, if they're buying those options to head their trade, they're kind of buoying the price of those options. So if we're selling premium, which is what I keep telling my folks, if you're in the market of selling premium, you're going to be getting, top dollar right now. So I always say, analyze where the market's flowing and be on the correct side of the transaction. If you're in the position right now to be able to sell some sort of premium, you're going to get higher premiums than we've been getting for a while now.
All right. Well, it seems as if because our show is on Friday, there's always some drama, like a Wednesday or a Monday that'll hit one of these peak or troughs, and then by Friday we're like, well, here's what happened. And this week it was Davos, the World Economic Forum, and I got a couple clips from that and a couple tweets that AJ, I'd love to get your take on as part of our morning sip. I feel like that was the big driver of news this week. And because Europe is ahead of us on the clock, they were kind of already chit chattering, and then the market opens, and then we're kind of reacting from it. But I often think about this in the future. One day, my kids hopefully will ask me about Donald Trump, and I'll be like, man, this guy was just like, he was a different kind of politician. And I found a clip from the Davos of his speech that was just crazy to me, to think that this is a leader of the free world, a politician, but really dedicated to getting what he wants. And so I'm going to go ahead and pull this clip up here. And then there are some details of the Green Deal that are coming out, AJ, that I also would love your take on. But first, let's go ahead and get this clip up, and then we'll see what you have to say here, AJ. So let's go ahead and play this. All right. So I just thought this was funny.
And then after the war, which we won.
Oh.
We won it big. Without us, right now you'd all be speaking German and a little Japanese, perhaps. After the war, we gave Greenland back to Denmark. How stupid were we to do that? But we did it. But we gave it back. But how ungrateful are they now? So now our country and the world face much greater risks that.
Let's go ahead and close this down. Okay, AJ, to me, that was hilarious. It's almost like offensive to say, but it's kind of true, and he's using it as a tool to negotiate with Greenland. And so, did you hear that remark this week? To me, that was like the most outlandish remark I heard from the entire event.
I mean, yeah. The diplomacy or lack thereof is just incredible. But yeah.
All right. So then from that, right, basically we're not invading Greenland, which I guess is a positive. But this new Trump Green Deal is like some of the detailed points are starting to come out, and I guess we're not buying it. And so, I think the overall market was happy with this, but it's basically the U.S. is going to gain control of small pockets of the land. The U.S. has the rights to Greenland's minerals, which it says is up to $5 trillion. The U.S. Golden Dome system can be built, which I think is a big driver of why we want Greenland. The deal is designed to block Russia and China. So I guess part of it was like Russia or China is not allowed in Greenland. We'll open the door to U.S.-backed infrastructure investment, and there's no and there's an indefinite time frame. And so, Greenland's been like a hot topic since the beginning of the month. Your thoughts on the details here? Is that a win for America?
Yeah, I just and there's a little bit of a double speak here.
Let me turn that off.
I think that this administration does things in roundabout ways. I think there was probably diplomatic ways that could be done that weren't played out in the media. Weren't, I think Donald Trump is, I'll be honest, I think Donald Trump is running shows of The Apprentice in his head. And I think that he likes to play things out in the public. I think he likes to be the star of his own show. And I'm not sure, I can only speak on the side of being a trader, being an investor. I'm not sure that's the best way to do things for investors and for the markets. But I don't know if there's any way around that. As an investor has always taught, you just trade the patterns as they come. It just creates patterns as we come. One of my favorite parts about the whole Davos thing, though, and I don't know if you picked up on this, but one of Trump's appointees, Howard Lutnick, was being interviewed. And he was saying also, all of the folks from the Trump administration that were talking at Davos said some things, just like you pointed out in that video, that were kind of like, you almost shake your head if you're, if you're trying to compromise or something or get something accomplished. That's maybe not the way to do it. But I liked it when Howard Lutnick was being interviewed and was saying some crazy things. And then there was like hecklers in the audience, and it turned out to be Al Gore. And I thought that was brilliant, that Al Gore, this old dude, well, he's not that old. He's 77 compared to Trump, who's I think 79, turning 80 this year. But he was out there just like booing and heckling Howard Lutnick. And I thought that was kind of telling. That was funny.
Yeah, it's like almost like a high school pep rally where everyone would like, there's like drama, there's like mean girls. There was a whole,
true.
The whole thing with Gavin Newsom too was interesting. It's like, why are you governor of California? And I live in California, and things are not good here. Why are you in Davos talking down America and making us look bad just to gain your political ambitions? That really frustrated me. I didn't like seeing that. But ultimately, it sounds like the deal with Greenland has been kind of minimized. The drama there has been subtle. We'll get more details as it comes out. But for us here at Trading Trainer and in the investor world, we're just trying to find opportunities to take advantage of these things that are happening. And that's what we're going to do throughout the rest of the show. We're going to revisit our swing trade from last week. We've got your pick of the week. We've got your speed round. But before that, we're going to take a break. I also want to give a shout out to Ken. Let's go ahead and pull up his comment here. So 4-month bills on the VIX trade. So he's basically, Ken's saying that there's going to be some drama happening this month. So he's liking that VIX trade. And then, someone else talking about being in Germany and being extremely confused. As always, folks, we are streaming live, so we appreciate the commentary. If you have any questions, throw them in there. We'll see if we can get to them. We're going to take a short break. We'll be back to, find some opportunities for you guys. So sit tight, grab yourself a coffee, go to the bathroom. We'll be back and we're going to be digging in some names here. So be back in a jiffy, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, folks. So before we dig into your trade of the week this week, AJ, let's go ahead and revisit that swing trade from last week, and this is in popular electric car manufacturer Rivian. Where are we sitting at here?
Well, okay, so I'm gonna throw on. I told folks last week that I was watching. I like to watch the Williams Percent R, and I want to emphasize for folks. Let me go ahead and click on this. Williams Percent R as an indicator applied on many of these charting packages. They put a 10-day number, which is kind of an intraday measurement. When Larry Williams came up with this, he always was talking end of day and he was talking 14. So make sure when you're using the Williams Percent R, the way that we talk about it, you calculate it on a 14. The scoop is you can see we're actually coming down on the Williams Percent R. Let me zoom this in for you guys. We're coming for a double bottom. Now, a double bottom, and a double bottom is actually a lot different than a double top. A double bottom has more, it has more of a validating effect than a double top. And that just has to do with the whole bear jumping out the window and the dynamics, the psychology behind the market. So I'm actually getting pretty excited about this Rivian trade that we're coming for a double bottom on the Williams Percent R. And you can see over here, I'm keeping good track of where our close is with respect to the 7-day. And so I've got my my trigger, which is the Williams Percent R. I've still got my great trend. So I'm just waiting for a close above the 7-day. And that would be the opening of my swing trade. And in this case, we were talking about either buying ourselves shares of Rivian, and I'd probably do that in round numbers of 100 so that if I wanted to do an option trading strategy later as an adjustment trade, I could do that. We also talked about possibly using a substitute, and we were talking about the Rivian $25 calls as a very speculative trade, or using the Rivian $15 calls for a more traditional trade. These are expiring out in June and September. So yeah, we're just things are queuing up, and not only are they queuing up, SIP, they're queuing up even better than before with that double bottom in our triggering indicator. So yeah, I'm very excited about the Rivian trade, but it hasn't popped quite yet.
Yeah, so if you guys want a further breakdown, check out last week's episode. We've got a nice little segment of the setup, but it's very similar to what AJ just broke down here. So go ahead and add that to the watch list. And then in your pick of the week for this week, you've got Bank of America. Feel like the financials are hot this week for a number of reasons. I think Capital One had earnings. There's this drama with Trump suing Chase Bank for the banking him or something. So a lot of drama in the financial space this week. What are you seeing in Bank of America?
Well, so I'm seeing another swing trade. You're right. There were all the banks. This was the first week of our January earnings season, which is usually financials week, but it was completely overwhelmed by the news of Davos, news of Greenland. But now that that's kind of becoming in our rearview mirror, I expect us to be talking about earnings next week and the following week. Yes, Bank of America already went through their earnings. And again, because there was so much influence on other stuff, investors kind of blew it off. But you can see exactly what we saw on Rivian. We're seeing it here as well. Looking at my triggering still is to an extremely oversold condition. And I came close to having a confirmation for a swing trade up. it pulled back. I'm waiting for my signals. Once I get my signal of a close above the 7-day, I'll validate it. One of my favorite things to do is to look for volume validation. Volume validation would be heavy volume, above average volume, trending up volume, which is exactly opposite what we're seeing right now. We're seeing light volume, we're seeing below average volume, and we're seeing volume that's going down. So that's the opposite of the volume validation we want to see. But when we get our confirmation, we get our validation, we'll look for subsequent day follow through and trade this thing like a swing up. And I picked out again, you could definitely just trade the stock, and I would buy it in lots of 100 so that when you get to the top of the swing, instead of just selling the stock, you could actually do a collar position on it, which could be kind of fun, and not only fun, but extra profitable. But some other options, I saw the Bank of America June $35 call would be a viable substitute. And this is all from our options lookup tool. Um, and anybody can get access to that. They just have to sign up for the free indicators, and you get access to our options lookup tool. But I was looking at the June, I was looking at the September. We've got all these calls that are coming up with our handy dandy. This is like an AI powered equity substitute finder. We call it the Viable Equity Substitute Finder, and it just identifies really good substitute options. Or if you want to play kind of the speculative, I picked out the Bank of America, either the June or even the September $60 call. That's an out of the money play. I would only do that if you were, and again, I can't give you any sort of investing advice. I can only tell you, some fun things to do, but the $60 call would be kind of a neat speculative trade. Make sure you size it appropriately.
All right, folks, that's AJ's setup pick of the week. Bank of America, ticker symbol BAC. We've got three pretty unique, nice, popular names here in the speed round. So let's run through them and get our lovely folks and fans all across the world set up for success this week. Let's go ahead and start with David out of Seattle, Washington. He's interested in your take on Snap, ticker symbol SNAP, social media darling. Not so much anymore, I believe.
I would agree with that, but this makes it a perfect scenario for selling premium. Now, Snap is coming up with some earnings. So you can see over here when I click on this little picture here, February 4th. So that's right around the corner. So not sure if you want to get into a premium trade right now, although it is bottoming. If I look back right here in August, earnings was not a good scene for Snap. Little less in April. Last January, it was no big deal. And the most recent one, not really a big deal to knock it out of the channel. So, 1 out of 4 was a big deal, 25% probability. So I don't know how you want to play that earnings. But in the meantime, you're right. A bottom is forming. Now, when I look at stocks, and this is just a heads up for all of you guys, one of my favorite bottoming indicators is the fast MACD. Again, we talked about it with the VIX, the 619.3. But in this case, I do like to calculate the fast MACD on the volume weighted average price versus the close price. So if I throw that on there, make it visible. Again, all these indicators I'm using are free to anybody who wants to sign up. Basically, I'm waiting for my light blue arrow to give me that end of day confirmation. And as I've been stressing this whole show, Sip, I'll look for volume validation. I'll look for price pattern validation, bar validation, news validation, whatever to give me confidence that that end of day signal is legit. And then I would follow through on a subsequent day, or look for follow through on the subsequent day. And again, I'd be cautious around this earnings. You never know what could happen during earnings, and the safe place to be is to either not be in the trade or be in the trade and have your collar already installed. So I'll let the folks decide what they want to do. But I agree with you. This is David from Seattle. David, this is a good timing for this.
The only perspective I would give is this has become an extremely complicated social media tool. I mean, Snap when it first started was very much like disappearing photos. Now it's got all this AI stuff and like short films, and it's just got a lot going on. So maybe that has to do with the earnings not doing so well. But I do see the younger folks still using it. So it has withheld the time component of how most social medias kind of maybe fade away. This one's
I
still
wonder
around.
I wonder if it's gonna go, remember when Groupon held out and they decided they didn't wanna be bought by Google, and then, kinda just fizzled away, about 10 years ago? I wonder, Snap, I think, had an opportunity to be acquired by one of the bigger companies, and they held out, and they've been holding on. I mean, if we look back over the last 5 years, let's say, or even 2 years, let's look at 2 years, you know, Snap's been slowly losing valuation. Now they're down $7 up to $9. Last time we traded it as premium trades, it was more like $10.50 up to $13. They've been having and the fact that they're not even reacting so much to earnings anymore, you almost wonder if they've lost their core investors that would be even interested in Snap. So maybe they like this position that they're in. A lot of times when you're not in the spotlight, you can do some cool things, like you said. I just remember Snap had all those funny filters where you could do funny faces and things like that. But I also, yeah, you're right. They started out as being the social media where you could send things and then have them disappear and not stay forever. Um, yeah, I don't know.
Yeah, we'll keep an eye on it. I tend to be more of the social savvy one on the show. All right, moving on to our second name. This is probably very popular in the world right now. Dave or Bill from Houston, Texas, is interested in Halliburton, ticker symbol HAL. Oil's been a darling, or it's looking like these guys are getting some love here.
Mm, mm, mm. Well, we know there's a whole bunch of plays happening in the infrastructure rebuild for Venezuela. Isn't that crazy? Like 2 weeks ago, we were talking about Venezuela, and now this week we're talking about Greenland. I mean, again, are these intentional, or are they? What is all this? We're constantly moving the camera. It's almost like I said, I almost feel like each episode is another episode of The Apprentice. Um, so yeah, behind the scenes, Halliburton is getting some. I think a lot of these companies we often follow Schlumberger. These are all companies that are involved in getting oil out of the ground, and so yeah, Schlumberger is up as well. So yeah, I think these people who for the last 5 years they've kind of been on hold. I think there is a push to re-engage these folks, especially around the whole Venezuela infrastructure. And I think that there's going to be U.S. taxpayer money subsidizing them, so investors are getting excited about it. Um, this looks like a swing trade setup for me. This definitely looks like there's a trend, right? If I come from where we were basically stalled 4 months ago to where we are in just the last amount of time. So let's come right here from that move. Yeah, you've got definitely an uptrend of almost almost 75% in the value of the stock. Um, Now here's the scoop. When you've got something trending like this and you want to do the swing trade, you have to wait for it to pull back. So I wouldn't jump in on Halliburton right now because you're paying a high price, right? When we buy something, we want to buy low, and then we want to sell high. We don't want to buy high and hope it goes higher. So here's my thoughts on Halliburton. Great trend setting up. We could do a retracement analysis and see, exactly when this trend started. I kind of pinpointed it here, but I'm sure I'm off by, a week or two. But you could really do a nice analysis on this and figure out what you needed to figure out. But I would, just to simplify, again, I would probably, let's add in that Williams percent R again. As a minimum, I wouldn't do anything. Remember, you got to change that to 14 because by default, they made that into a day traders um, tool rather than an end of day traders tool. So I would want to see how the Williams percent R is living right now at an extreme overbought condition. Again, a reason why you don't want to buy now. It's at a high price. You don't want to buy high and hope it goes higher. We want to get a low price. So we want to wait for the Williams percent R to get below this negative 90 number. And then that's when we would think about, long on Halliburton. So, last time we had that was in middle of November around Thanksgiving, and we got that really nice signal. And then you can see from there if you swing, did the swing trade just that amount or you left it in place. So there you go. And I don't know, did you, Bill or Dave from Houston, did you trade this as I remember in the past quarters, we've done Halliburton as a earnings play. Did you make money on the earnings play? It looks like if you did a calendar spread on Halliburton, you would have made a lot of money this week. So uh, for those folks that did that, congrats. But swing trade, let's wait for it to pull back.
Yeah, these oil names are definitely being driven by the geopolitical movements, probably more so than earnings and whatnot. But I do think that Halliburton was one of those names at that energy round table. I don't know if you remember that right after
Yeah,
we see
they were
Venezuela, but
like,
that was a big
I
thing.
don't know if I want to do this. Yeah. Yeah.
All right, cool. Moving on to our third and final name, a popular name on the show. Tanya out of Rochester, New York, wants to know what's going on with burgers, AJ, in Wendy's, ticker symbol WEN.
Man, we used to, if you go back to some of the first episodes of this show, like 4+ years ago, we were all over Wendy's. We were doing premium trades, and Wendy's was fattening my pocketbook every month. But then since then, I mean, I think that, fast casual, a lot of these companies have diverged, like Burger King and McDonald's have their fingers in other tills now, not just in their main business. I don't know if Wendy's has done that. So you can see again. I'm going to go back and look at about 2 years worth of price action. Wendy's has stopped sideways channeling and has been more of a shorting. I think a lot of the big money traders out there have actually been talking about that they've got short positions against Wendy's. I don't know why I'm having a tongue twister on that. But look, Wendy's is coming up. This is classic consolidation. I mean, I don't know if you can see that, but it's classic consolidation. So the first thing you have to do is you've got to figure out, you got to go and read the headlines around Wendy's, whether your broker has stock specific headlines or you go to a website like finviz.com and type in the ticker symbol WEN, and then they give you all the headlines from the most recent to the farthest back. But you basically have to figure out what's been going on since approximately, Thanksgiving Day of last year. What's been happening that has caused Wendy's to start consolidating. Maybe there's news of an acquisition of Wendy's or, something like that, like we had with of Warner Brothers with Paramount and Netflix. You start to see the stock price consolidating around, the headline price of what another company's willing to pay. Maybe there's something. So I haven't been following Wendy's ever since they started to take a dip, but I think that's the first thing is you've got to figure out what is behind this consolidation. Now, if you can't really find anything, significant, and it's just consolidating because investors are uncertain about what might happen next with Wendy's, then you might consider a straddle or strangle position. And you could actually play that as a volatility if you use a near term straddle or strangle, or if you want to do and try to catch the price action, you could do a far out in time straddle or strangle. And it looks like Wendy's has some earnings coming up. Let me see if I can. I haven't been on some earnings calendars recently, but maybe we can get an idea by going to a 1 year chart. Last year they were on February 12th. So I would imagine the first or second week of February is when Wendy's is scheduled to release earnings. That could be the catalyst for a pop in one direction or another, where a straddle or strangle would actually benefit you. So yeah, it's not a premium trade. I don't want to set up a position on Wendy's and then try to sell calls and puts or collar this thing with it consolidating. What I would rather do is potentially trade the breakout at earnings, or look for a different ticker.
Yeah, sometimes they're not all there. Wendy's is interesting, as are more of the other fast casual restaurants, or I don't know how we categorize these, but their prices have been skyrocketing, and so inflation, I feel, has a great factor in why these companies are succeeding or not. It may be very much so that consumers are pulling back because freaking Big Mac or cheeseburger is up like 300% in like 5 years. It's crazy.
It really is.
All right. Thanks for that, Tanya. Appreciate it. That concludes our speed round. All right, AJ, getting close here to the end of the show. Heading into the final week in January. What are we setting up for heading into the weekend, heading into next week? Obviously, we've got that Fed meeting next week. What else are you keeping an eye on?
Well, it seems like we've got a lot of swing trades setting up. But I want to caution everyone that this uptrend and a lot of these swings, we've got to step up our pace. If you are not somebody who can watch the markets, throughout the days, if you, like, for instance, have responsibilities that would take you out of play of watching the markets, then you need to have some strategies that you're doing where you can do that, right? The market isn't going to wait for you to go pick up your kids at the school bus, right? The market isn't going to wait for you to have a doctor's appointment. The market's going to do what the market's going to do. So you need to have strategies that you're trading if you need to step away from the computer that can tolerate that. So, premium selling strategies, collaring strategies, married put or married protection strategies should be what you're using. But yeah, there's a lot of swing trades materializing, but I don't think that they're going to be necessarily easy to trade like they were over the summertime. I think they're going to be challenging to trade, and that you're going to need to be able to react at a moment's notice, no matter what's happening in your personal life. And if not, then look for those needles in the haystacks. Get yourself into those premium selling trades. Maybe look at some of these earnings that are going to be released next week and see if there's any of those trades that we can do our traditional calendar spread on and walk away with some nice gains in a day's period. But that's kind of the 2 cents I've got.
Yeah, it does seem like the earnings season is going to start to pick up, and that's going to be a big driver for a lot of the things taking place. And with that, brings us here to the conclusion of our show. As always, folks, we do appreciate you guys tuning in. Feel free to show some love. We've got that quick links page in the chat. Head on over there, hit that follow, hit that like, hit that subscribe button. You can get access to the free indicator suite as AJ described in his analysis. You can get access to a couple of great tools there. The option lookup tool, I believe, is still available, right?
Mm-hmm.
All right, you can grab access to that there. We've got our free daily workshop, so if you're interested in getting a little bit more hands-on with premium selling, the link is there. We've got information about Trading Trainer as a whole, and we've got some custom coaching stuff. So if you need a little bit more hands-on training, we've got the services and tools for you. So head on over to the quick links page, check it out. I'm a little sad this week, AJ. My Chicago Bears did not make it to the second round.
I know, I saw that.
But it was a good game against my second team, I guess, the LA Rams. And so that's what I'll be doing this weekend. I'll be cheering for the hometown team, although a little sad. Any big plans for you? Oh, I guess staying warm, right?
Staying warm. So we have a big snowfall. And again, depending on the model, we could get anywhere from, a half a foot of snow and then followed by icy rain to actually 2 feet of snow. So I'm excited about getting the snowblower out because everybody on my street loves to. It's going to sound funny, but one of the things that just gives me jollies is cleaning the street with my snowblower. So people like to see me when it's snowing going up and down the street with the snowblower. So that's like it's walking meditation, Sip. I know I'm weird.
Yeah, and for everyone else watching across the country, please stay safe, stay warm. I'm seeing the forecasts of sheets of ice and record cold. So do what you got to do to prepare for that.
Far down south.
I mean, it's going to get as low as 42 over here, AJ. So I'm definitely preparing myself, for, pulling out that extra sweater just to make sure.
I mean, I've got the velour on today.
That's right. Got a little that 80s vibe, or you're going to a jazzercise class. That was my second thought. All right, folks. AJ, thank you again for your time. Thank you, everybody, for tuning in. We truly do appreciate it. Wishing you all a very safe weekend, and we'll catch you guys next week. That's all I got from my end.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you